The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, I was able to, on Thursday, March 7th, attend the StoneX Ag and Dairy Outlook Forum and have a conversation with Arlan Suderman, Chief Commodities Economist at StoneX, on the Thursday morning episode of AOA, Agriculture of America. Want to share that conversation with you here right now on our Market Talk YouTube channel. I called Wednesday kind of the dog days of wheat, so to speak. Wheat just kind of fell apart overnight into Thursday's session. A little bit of a grain rally, but I know fundamentally we got a lot of overhead resistance here we're bumping up against, and it's not a lot of fundamental change in these markets, Arlan.
Yeah, the bottom line, much to the dismay of our producers out there, we've been in commodity deflation mode since June of 2022 with the funds just shorting the commodities unless that particular commodity has a story. A good example of a story would be cocoa has a story with weather and disease cutting the size of crops and leaving things tight. The protein sector has a story because of the declining size of the cow herd and the sow herd in the hogs, and so we've been reducing the supply of meat available on the market. And cotton, we find that the crop last year wasn't as big as what we thought. You know, there's a story there, or crude oil with geopolitical risks in the Middle East. But outside of that, whenever those headlines die, the default mode is to sell the commodities, and the funds building massive short positions into commodities, which is something they do all the time historically, or most of the time, I should say, as we look back at history, during times when they expect inflation to be declining. I think that's going to change going forward. Probably starting in the second or third quarter, we're going to see inflation pressures come back, in my view. And I think they're going to say, why are we short the commodities when we need to be long the commodities? That doesn't necessarily mean we get a big rally in commodities, but it tends to mean that we manage the same supply and demand at different levels. Now, as we look at overnight, when the markets get so oversold, so short, so at such low prices, it doesn't take much to get a bounce. And we really saw that in our overnight trade. And in this case, it was a story about China. With trade data coming in better than expected, showing January and February 7% increase year on year on trade. Now, a year ago, the numbers are very low, so that helped prop up this year. Ironically, that story comes out at the same time we see soybean imports really backed off in January and February because of the holiday period and giving other kind of excuses, but yet they say that overall trade increased by so much. So there's a lot of inconsistencies in the data and in the reports, surprise, surprise, coming out of China. But when prices are so low, it makes a nice excuse. We had a big sell-off in wheat, you mentioned, on Wednesday on rumors that China had canceled some wheat purchases. And now today we focus on something else. So a lot of it, to the frustration of people, is just about money flow.
Yeah, and you think about all that economic news and more that comes out of China always tends to be a market mover, to your point. Also, too, couple that with what we're seeing here in the U.S. as of late. Of course, the continued inflation story. I know Fed Chair Powell spoke in D.C. on Wednesday. We've had a lot of jobs data out this week. There's been a lot of outside market news as well that's been at play here this week, Arlan.
Yeah, twice a year, the Federal Reserve Chair is supposed to testify before the House Financial Services Committee and then the Senate Banking Committee, just to kind of give the state of monetary policy. And so yesterday was the turn in front of the Financial Services Committee there in the House, and very interesting response by the market. Basically, we go back to our economy is driven by consumerism. It makes up about 70% of the economy. And so consumer sentiment really drives this economy. In order to get inflation down, you have to slow down the economy, which means putting a drag on consumer sentiment. And they did that to a great extent, raising interest rates. Then the December meeting, Fed Chair Powell made comments which the market interpreted as a pivot in policy. They didn't cut rates. They didn't say we're going to cut rates at the next meeting or anything like that, but they said we are ready to start talking about when we might cut rates, and the market jumped ahead and said, they've pivoted policy. And so therefore, Wall Street celebrated. We saw new record highs on Wall Street. The consumer sentiment jumped. Consumer buying came back. And lo and behold, we had 2 months back-to-back of higher inflation than expected. So now they have to come back and say, whoa, getting a little ahead of ourselves here, and they have to sound more hawkish so that the consumer pulls back again, because there's still enough money and stimulus in the system. Fiscal spending is a big part of that on an election year, that we can bring back inflation, and they don't want to make the same mistake they made in 1980 when they pivoted too soon and inflation came roaring back, and then they really had to take some drastic steps to bring it under control.
Yeah, no, that's a great point. I think a lot of folks listening in remember the 80s for sure, and what happened with inflation then. And I think too, back at the farm level, a lot of folks are getting ready, and they're making their input decisions for spring planting, seed, chemical, fertilizer. We've seen a lot of talk about fertilizer here as of late as well, and just that cost of inputs in this inflationary environment. The last couple of years, farmers have made a fair amount of money, but now we're kind of in that down cycle again. And I know a lot of folks are tightening the belt, so to speak, here across the ag sector, Arlan.
Yeah, and that's not a fun stage of the cycle to be in by any means. And we certainly don't anticipate things getting as bad as what they were in the 1980s. That was a very dark time in agriculture. And we don't anticipate it getting that bad, but we don't want it to get that bad either. But we've had some years, as you said, of some good prices, and now we're going into a cycle of perhaps a period of low prices, and that means really tightening those margins and really having to know what our numbers are. Where's our break even? We're on our fixed costs and our total costs, and what makes up a good price, and really sharpening that pencil and treating it like a business. And we spent the last couple of years building equity on our farms. Now it's time to protect the equity on our farms. And instead of hitting home runs in our marketing, we're seeing what we can do to hit singles. And as I was at Commodity Classic last week, one of the stories, and we talked about this last week, was just how farmers are really down and discouraged and about their marketing. And each one of them comes up to me individually and says, "Man, I wish I had done more. I made a mistake. I should have sold more." And it's the same story with each of them, but they feel like they're alone. And those are the times you have to say, okay, what can I do today to hit a single? Where can I sell some good basis that'll work out? Where can I get a forward contract or something like that? Just little things to start getting some success, start getting our confidence back, to see the market with some confidence once again, and get that mojo back, so to speak, in our marketing. These are going to be tougher times, but we can make it through it. There's still a lot of positives in agriculture.
Very true. Very true. Coming up on Friday, of course, we got the March WASDE report. I feel like, for the most part, everyone's paying attention to what USDA will say about South America, not expecting this to be a market mover much in many other places, but it'll be curious to see what that South American number looks like from USDA, Arlan.
Yeah, absolutely. I think that's going to be the key to the report that the market's going to respond to. Last month, the USDA only went down 1 million metric tons on their soybean production estimate. Does that mean they make a bigger drop this time? Or are they seeing some things that we're hearing rumors of in the satellite pictures, that the area planted in Brazil is larger than was anticipated, that their expansion in recent years has been faster than what was anticipated? That's a key question going forward. We saw our customer survey in Brazil raise its estimate by 1 million metric tons this month, which kind of gave us reason to pause that maybe we've kind of hit the bottom and above the 150 million metric ton level for soybeans. And if that's the case, then that's not friendly to the market. But then again, it means the market's probably priced in the worst of the news, so to speak. But we'll see what USDA does. that'll really set the tone.
Yeah, I think a lot more eyes will be on the end of the month with quarterly grain stocks and the acreage report as well coming up here just a few weeks' time, Arlan.
Oh, it does. And if you look at it, how short the funds are, and that means they're somewhat at risk as well. And they've been protected in those positions to this point. But they start getting nervous as well. They're humans as well, and they worry about what could go wrong. And if you get a headline somewhere that causes all those speculative shorts to try to get out the door at the same time, then it can create some problems for them. And you've got reports at the end of the month that are known for their surprises. And then you've got weather risks in South America for the winter corn crop. You've got weather risks here in the Midwest. You've got talk of how quickly will this El Nino demise, and will it go into a La Nina by summer? That can mean the difference between a bumper crop this summer in the United States and a short crop in the United States this summer. So there's a lot of variability coming up. The funds may not be comfortable carrying those big short positions in, and I think that's another reason here why we saw some strength in the overnight markets.
Once again, a conversation with Arlan Suderman, Chief Commodities Economist at StoneX during their Ag and Dairy Outlook Conference in Nashville, Tennessee. And that interview originally airing on the Thursday, March 7th episode of Agriculture of America, AOA, that I'm able to host on multiple radio stations and Sirius XM 147 across the country. Find more on AOA at agricultureofamerica.com and find more Market Talk info online as well at markettalkag.com. I'm Jesse Allen reporting.